Hindustan Lever movie played from 1998 till 2010 when the stock delivered precisely zero returns. ITC, I don't want to mention that name, but has had a very checkered career as a stock being all over the place, but lately not even all over the place, been very flatlined over the last couple of years. HDFC Bank has flatlined for I think 2.5 years now. Kotak Bank about that. I mean, autos, of course, less said the better. So a lot of the much haloed companies have really been the worst places to be in, merely because there was so much consensus that they buy them and forget them, and you will be forever compounding 20%. Unfortunately, it's not that simple. Investing cannot be brought down to these kinds of boilerplates, because those boilerplates didn't even make Warren Buffett any money in buying Coca-Cola, which has underperformed the market from the time he has bought, versus Pepsi, which has done 4 times better than Coca-Cola. So forget about us lowly people. Warren Buffett had that one-line boilerplate of buying great brands. Even that has not done him any good. So in India, all these stocks, I mean, 50, 60, 70, 80 times earnings, when we were looking at them a couple of years back. I mean, it was impossible that they would compound at those multiples, because the earnings growth, therefore, if you hold the multiple as a constant, earnings growth that they needed to deliver in aggregate was going to be 15, 20%, which is impossible to sustain because the sizes of these companies are significant. If you just do broad thinking, their sizes relative to GDP, their profits relative to GDP are really sky high. If they continued growing like that, and that is economic theory, these will become equal to the GDP. Okay, I'm not saying that they will, but that's the economic logic, that single companies cannot keep growing at the same rate forever.